Welcome back, brave investors and curious minds, to TechEyeSpy, where we venture into the untamed wilderness of innovation, where biotech meets the future. Today, we're entering the lair of Werewolf Therapeutics, a company howling at the forefront of cutting-edge cancer therapies. Armed with its powerful Predator platform, Werewolf seeks to unleash a new generation of immune therapies that could change the landscape of cancer treatment forever. But beware, dear viewers, as with any wild beast, there are dangers lurking in the shadows. We'll examine their strengths, uncover their weaknesses, explore the opportunities ahead, and confront the threats they face. Before we embark on this moonlit journey, don't forget to subscribe to TechEyeSpy. Hit the notification bell to ensure you don't miss any of our deep dives into the world of tech and biotech. Now, let's step into the wild world of Werewolf Therapeutics.
If you like the following content, please leave a tip at buymeacoffee.com/Whitley.
Werewolf Therapeutics stands out in the competitive landscape of biotech companies due to its pioneering Predator platform, which represents a significant leap in cytokine-based cancer therapies. The platform is designed to conditionally activate immune-stimulating drugs, specifically in the tumor microenvironment, a strategy aimed at overcoming one of the long-standing challenges in immunotherapy, systemic toxicity. By enabling drugs like WTX-124, which is an IL-2 prodrug, and WTX-330, an IL-12 prodrug to activate only within tumors, Werewolf minimizes the severe side effects commonly associated with cytokine treatments, a known limitation of traditional cancer therapies. This unique ability to selectively target tumors while reducing collateral damage to healthy tissues provides Werewolf with a distinctive competitive advantage in the growing field of immunotherapy. Such an approach not only promises enhanced patient safety but also potentially improved treatment efficacy. The results so far have been promising, with early-stage clinical trials for both WTX-124 and WTX-330 showing significant clinical responses, including complete tumor regression in some cases and manageable adverse effects. These outcomes have strengthened Werewolf's position in the biotech space as an innovator in condition-activated therapies. In terms of company structure, Werewolf's leadership and strategic partnerships further bolster its strengths. Led by experienced professionals like CEO Daniel J. Hicklin, PhD, who has a long history in immunotherapy and biotechnology, Werewolf's management team brings both scientific expertise and business acumen, crucial for navigating the challenges of drug development and market competition. Hicklin's leadership, combined with the financial oversight provided by CFO Timothy W. Trost, has helped the company maintain a solid financial runway. With $135.3 million in cash reserves, Werewolf is well positioned to continue funding its clinical trials and operations through the first quarter of 2026, reducing the immediate pressure to seek additional financing, which is often a critical concern for early-stage biotech companies. Another strategic asset is Werewolf's collaboration with Jazz Pharmaceuticals, which not only provides additional financial support but also serves as a form of external validation for Werewolf's technological platform. Jazz's involvement adds credibility to Werewolf's innovative approaches and accelerates the development of their therapies, benefiting from Jazz's commercial expertise and market reach in the pharmaceutical industry. These partnerships have not only validated Werewolf's potential but have also allowed it to focus on its core innovations without being overwhelmed by the commercialization process. Furthermore, Werewolf's financial discipline is evident in its prudent management of operating costs, ensuring that its cash reserves are optimized to sustain long-term growth. While research and development expenses have naturally increased as clinical trials progress, this spending is justified by the advancing pipeline. Werewolf's ability to maintain relatively stable general and administrative expenses, despite expanding R&D, is a testament to its efficient resource management. While Werewolf Therapeutics boasts considerable strengths, it is not without its weaknesses, particularly those associated with its status as a clinical stage biotech company. The most glaring challenge facing Werewolf is its lack of approved products or revenue-generating assets. Feel free to correct me if I am wrong, but as a potential investor just doing his due diligence, damn. Anyway, as the company remains entirely dependent on the success of its early-stage clinical trials, it has yet to bring any therapies to market, which creates a significant risk for investors. Without a steady stream of income from approved drugs, Werewolf must rely on its cash reserves and external funding to sustain its operations, making it vulnerable to market shifts and the success of its fundraising efforts. A related concern is the company's heavy reliance on a limited number of key assets, particularly WTX 124 and WTX 330. While these programs have shown promise in clinical trials, they are still in early to mid-phase development. Any setbacks, whether related to efficacy, safety, or regulatory approval, could severely impact the company's valuation and its ability to continue operations. The company is also at risk of over-relying on the combination of these treatments with other agents, such as pembrolizumab, which may not always yield the expected synergistic effects. This over-reliance on a small pipeline is a common issue for many early-stage biotechs, but it amplifies the inherent risks of clinical development. Another significant weakness is the high and increasing cost of research and development. Of course, high R&D is to be expected in a startup pharma tech company like Werewolf, so please do not assume. 2024 alone, Werewolf reported R&D expenses of $15.3 million, a notable increase from the previous year. This escalation is primarily driven by the costs associated with ongoing clinical trials and the manufacturing expenses required to support these trials. While the spending is a necessary investment in the company's future, it contributes to the widening net loss, which reached $17.2 million in the second quarter of 2024. If clinical trials take longer than expected or fail to deliver favorable results, the high cash burn rate could shorten the company's financial runway despite its current cash reserves. Additionally, Werewolf's financials show a significant decline in collaboration revenue, which fell from $8.1 million in Q2 2023 to just $1.1 million in Q2 2024. This drop signals that the company has largely exhausted its collaboration-related income, specifically from its agreement with Jazz Pharmaceuticals, further limiting short-term revenue prospects. While Jazz Pharmaceuticals remains a strategic partner, the absence of new or continuing collaborations raises concerns about the company's ability to sustain funding through partnerships alone, which could increase pressure to dilute shareholders through future equity offerings. Moreover, Werewolf operates in an extremely competitive landscape, particularly within the field of cytokine-based cancer therapies. Several other biotech companies, many with more advanced pipelines or larger financial resources, are also working on similar therapies. This competitive pressure could slow Werewolf's progress, especially if competitors achieve better clinical results or secure regulatory approval more quickly. Werewolf must demonstrate that its Predator platform is not only innovative but also clinically superior to other approaches. Failure to differentiate its therapies effectively in this crowded market could result in difficulty securing additional partnerships or market share once products reach commercialization. Lastly, Werewolf's reliance on favorable regulatory outcomes presents another layer of risk. The company is subject to the stringent approval processes of the FDA and other global regulatory bodies. Any delays in clinical trials, failure to meet critical endpoints, or safety concerns that arise during testing could lead to significant setbacks, not just for product approval but also for investor confidence. Regulatory hurdles are particularly concerning for immunotherapies, which can be unpredictable in their response profiles due to the complexity of immune system interactions with cancer cells. In summary, Werewolf Therapeutics' weaknesses are typical of many early-stage biotechs: a heavy reliance on a limited pipeline, increasing R&D costs, lack of short-term revenue, and the risks inherent to clinical development and regulatory approval. Without a diversified portfolio or approved products, the company's future depends heavily on the success of its key drug candidates and its ability to manage cash flow while navigating the highly competitive immunotherapy space.
Discover unique gifts with Martian home prints on eBay. Looking for amazing gifts that are out of this world? Visit Martian Homeprints on eBay for a fantastic selection of unique items, including our rare and stylish flag socks. Whether you're shopping for a special occasion or just want to treat yourself, we have something for everyone. Our collection is perfect for those who appreciate creativity and uniqueness. Shop now at Martian Homeprints on eBay and find the perfect gift that stands out from the rest. Don't miss out on these incredible items. Just type Martian Homeprints or click the link in the description below and explore our store today.
The opportunities for Werewolf Therapeutics in the biotech and immunotherapy market are substantial, driven by the growing global demand for innovative cancer treatments, particularly in cytokine-based therapies. Werewolf is uniquely positioned to capitalize on these trends through its Predator platform, which allows for selective activation of immune-modulating drugs in the tumor microenvironment, a critical factor in reducing toxicity while increasing treatment efficacy. The global cancer immunotherapy market is expanding rapidly, with a projected market value of over $163 billion by 2030, growing at a compound annual growth rate, CAGR, of approximately 13.8% from 2022 to 2030. This robust growth is being driven by advances in immunotherapy, which have transformed cancer treatment by leveraging the body's immune system to fight cancer cells more effectively. As immune therapies become more refined and demonstrate their value in clinical trials, the demand for innovative solutions like Werewolf's conditionally activated cytokine therapies is likely to surge. In particular, the market for cytokine-based therapies has garnered significant attention from Big Pharma, which has invested heavily in acquisitions and partnerships in this area. Over the past 6 years, more than $9.7 billion has been poured into acquiring companies and technologies related to cytokine-based therapies. Werewolf's Predator platform, which addresses long-standing issues like systemic toxicity, is uniquely positioned to compete in this lucrative market segment. If successful, the company could capture a significant share of this market, especially as larger pharmaceutical companies increasingly look to partnerships or acquisitions to expand their portfolios of next-generation immunotherapies. Moreover, Werewolf has already demonstrated the potential to expand its platform beyond oncology. The company is currently advancing cytokine molecules for inflammatory diseases, including the development of an IL-10 molecule for inflammatory bowel disease, IBD. This expansion into immune-mediated diseases opens up new market opportunities outside of oncology, where the demand for novel therapies targeting chronic conditions is also growing. The global market for inflammatory diseases is vast, with therapies for conditions like IBD expected to reach over $25 billion by 2026. Werewolf's ability to adapt its core platform for use in these non-oncological indications offers a diversified revenue potential that could buffer the company from the risks of being too oncology-focused. Another opportunity lies in strategic partnerships and licensing agreements. Werewolf's collaboration with Jazz Pharmaceuticals has provided validation and financial backing for its technology, but there is significant potential for further partnerships. As the company continues to develop its clinical pipeline, it may attract additional partnerships, particularly as pharmaceutical giants look for innovative biotech firms with transformative platforms. These collaborations not only provide immediate financial benefits but also help with the commercial scaling of therapies once they gain regulatory approval. Looking ahead, the future for Werewolf depends heavily on the successful completion of its ongoing clinical trials. Positive data from its lead candidates, WTX-124 and WTX-330, could significantly elevate its profile within the biotech community, leading to increased investor confidence and potentially triggering new licensing deals or acquisition interest from major pharmaceutical companies. Furthermore, the company's platform has the flexibility to target a wide array of solid tumors, creating the potential for multiple indications and expanded use cases. As the regulatory environment for immunotherapies continues to evolve, Companies like Werewolf that focus on innovative, targeted approaches will likely benefit from favorable approval pathways, especially as global health agencies prioritize breakthroughs in cancer treatments. With regulatory agencies already shifting toward more adaptive approval frameworks for novel immunotherapies, Werewolf could see accelerated timelines for approval if clinical trials continue to show promising results. In conclusion, Werewolf Therapeutics is strategically positioned to take advantage of multiple opportunities within the immunotherapy and broader biotech markets. The company's innovative platform, coupled with strong market demand for more effective and less toxic cancer therapies, sets the stage for potential growth and industry leadership in the coming years. If Werewolf can navigate its clinical trials successfully and secure further partnerships, the company has the potential to significantly impact the landscape of cancer treatment and beyond. Despite its promising platform and potential, Werewolf Therapeutics faces several significant threats that could impede its long-term success. The first and most immediate threat is the inherent risk of clinical trials, particularly for early-stage biotechnology companies. Werewolf's pipeline, while innovative, remains in the clinical trial phase, with WTX-124 and WTX-330 still undergoing evaluation. Clinical trials are fraught with uncertainties. Issues related to safety, efficacy, or even patient recruitment could delay progress or lead to unfavorable results. Werewolf is heavily reliant on these two lead assets, meaning any adverse outcomes in trials could substantially diminish its valuation and market confidence. The biotech space is unforgiving when it comes to trial failures, and a single failed trial could set the company back significantly, both financially and reputationally. Another major threat is the intense competition within the immunotherapy sector. The cytokine-based cancer therapy market is already crowded, with numerous biotech firms, as well as big pharma, investing heavily in similar approaches. Werewolf's competitors include more established companies with greater resources and broader pipelines. To succeed, Werewolf must demonstrate clear clinical superiority over these competitors, which is no easy task. If other companies are able to develop safer or more effective therapies that surpass Werewolf's products, it could lose out on crucial market share and partnerships. This competitive pressure not only threatens market position but could also impact the company's ability to attract new investors or additional strategic partners. Regulatory risks also present a significant threat to Werewolf's future. The approval process for new therapies, particularly those related to immunotherapy, is complex and often uncertain. Werewolf is subject to FDA scrutiny and other regulatory hurdles, and there is no guarantee that its therapies will receive approval even if they perform well in trials. Furthermore, the regulatory landscape is always shifting, and new requirements or unforeseen hurdles could arise, delaying or derailing product approvals. Regulatory setbacks could significantly extend the timeline to commercialization, straining the company's resources and testing investor patience. Financially, Werewolf's high burn rate adds an additional layer of risk. Although the company has a solid cash runway through the first quarter of 2026, its increasing R&D expenses, which have already jumped to $15.3 million in Q2 '24, are a growing concern. If clinical trials are extended or require additional investment, this cash runway could be shortened, forcing the company to seek additional funding through equity offerings. Such measures could dilute current shareholders, reduce share value, and impact investor confidence. While Werewolf is actively managing its finances, the high costs associated with biotech R&D are a constant pressure, especially if the company does not secure additional sources of income or partnerships. Werewolf also faces potential macroeconomic threats, including market volatility and shifts in investor sentiment. The biotech sector is particularly sensitive to changes in economic conditions, interest rates, and investment trends. A downturn in biotech valuations or a shift toward more conservative investments could limit Werewolf's ability to raise capital or maintain its stock price. Additionally, geopolitical risks, such as changes in trade policies, healthcare regulations, or the global economic climate, could further complicate the company's growth trajectory. Finally, the timing of technological advancements in the broader healthcare industry could serve as both an opportunity and a threat. If other companies or academic institutions make significant breakthroughs in immunotherapy or alternative cancer treatments, it could outpace Werewolf's progress. The fast-moving nature of biotech means that timing is everything. Werewolf must not only advance its own technologies but do so quickly enough to maintain relevance in an evolving market. Failure to keep up with these advancements could result in the company being overshadowed by more agile or innovative competitors. In summary, Werewolf Therapeutics faces a variety of threats, ranging from clinical and regulatory risks to financial pressures and competitive forces. The company must navigate these challenges carefully, as its future depends heavily on the successful advancement of its clinical trials, effective competition in a crowded market, and the prudent management of its financial and regulatory pathways. Werewolf Therapeutics is an innovative biotech company with immense potential, but also significant challenges typical of its sector. Its Predator platform is a clear strength, allowing for the selective activation of immune therapies directly in the tumor microenvironment. This approach addresses a critical need for more effective and safer cancer treatments, positioning Werewolf at the forefront of immunotherapy development. The company's collaboration with Jazz Pharmaceuticals and its robust financial reserves, which give it a runway through 2026, further solidify its foundation. However, Werewolf remains highly dependent on the successful clinical progression of its lead candidates, WTX-124 and WTX-330. As a clinical stage biotech, it has no approved products and is still far from generating sustainable revenue, making it vulnerable to clinical failures, regulatory hurdles, and the intense competition in the immunotherapy space. Its rising R&D expenses and declining collaboration revenues also contribute to financial risks, even though the company has managed its cash position carefully to date. On the bright side, Werewolf's opportunity to expand beyond oncology into inflammatory diseases, along with the potential for further partnerships or acquisition interest from larger pharmaceutical companies, provides a path for future growth. The global market for immunotherapies, projected to reach $163 billion by 2030, $33 billion by 2030 market. That sets a substantial opportunity if Werewolf can successfully bring its therapies to market. That said, the company is still navigating a sea of competitive and financial threats. Efficient use of its financial resources. Efficient use of its financial resources and the ability to differentiate its offerings from competitors. Werewolf has the potential to be a transformative force in oncology and beyond, but it remains in a high-risk, high-reward phase. For investors and stakeholders, this is a company to watch closely, but with eyes wide open to the challenges that lie ahead. Thank you for joining us under the full moon in this TechEyeSpy adventure. We hope you enjoyed this deep dive into the wild and untamed world of biotech. If you found our analysis useful, don't forget to subscribe and stay alert for more thrilling insights. And remember, for more analysis, investing tips, and updates, head over to TechEyeSpy.com, your go-to source for all things tech and investment. Until next time, keep your eyes sharp and your investments smarter.
Thank you for watching. Please like, subscribe, and hit the notification bell. If you enjoyed my content, please support this channel by visiting buymeacoffee.com/Whitley or scan the QR code to leave a tip.